Hey, what's going on, everybody? Welcome to another week of the Rapid Review. Apologize for doing this such a late one this week. I had a lot going on this weekend, but still, nonetheless, wanted to get this stuff out to everybody. We had a shortened week with the holiday this week, but there's definitely a ton to talk about. Indexes hitting some key levels, distribution piling on, a lot of stuff going on in the news. So the question is now what? What are we looking at in order to make sure we execute properly in the next upcoming week? So with that being said, let's get right on into it. All right, so let's get started. Market direction. We're in an uptrend, and power trend is still on. We're still hovering above that 21 day, so power trend is still intact. But talking about distribution days, last week we had 6 distribution days on the S&P. We had 3 distribution days on the Nasdaq. We added distribution day this week, and we'll go over to the distribution day tracker to look at that. So you can see on Friday we added a distribution day on both the Nasdaq and on the S&P. And you can see we've started to accumulate a lot of days, especially on the S&P. Now that we're up to 7. With that being said, we are primed up to lose the 520 distribution day on the S&P, and very close to losing the 521 on both the Nasdaq and the S&P. 25 trading days since that day it occurred. So some could drop off, which will bring us to a more reasonable level. If we don't gain any more, we'll be looking at a total of 5 on the S&P and 3 on the Nasdaq. But still, needless to say, there's definitely been a lot of gain in distribution. So a little bit of concerning on that side. But other than that, we'll look at the market action to actually talk about what that really means in just how the market is trending. So the S&P was down 0.15% for the week. NASDAQ up to 0.21%, and the Dow squeaked out 0.021% of a gain for the week. And the S&P pretty flat for the year, up 1.47. NASDAQ fairly flat as well, up 0.71, and Dow down 0.79. So really, the best way to describe this entire slide is flat. Not too much going on a yearly basis. Obviously, big up, big down, but in terms of gains or losses, and not too much going on in terms of the weekly action when we look at how we closed out this week from last week. Moving averages. So we are still below the 10-day simple moving average. So something to be said there. But the big thing that has been staring at a lot of us is the fact that we continue to stay above that 10-day exponential moving average on the NASDAQ and on the S&P. And when we jump into actually looking at the indexes and the charts, we'll talk a little bit more about that. But being above that level is very important. That's why that power trend is still intact. And needless to say, there's nothing too alarming just yet. And we're kind of going to have to wait and see approach to see which way we're going to break from here. So let's just do that. Let's jump over and take a look at the indexes. As we always do, we'll start off on the NASDAQ. So like we said, short week. We only had 4 days of trading this week, with Thursday being a holiday. And we actually started off pretty strong in the beginning of the week. We jumped up and got back above that 10-day simple moving average, which is positive action, and really looked like a strong start to the week. But as you can see, through the rest of the week, we kind of just edged down and got back below that 10-day simple moving average, pulling in closer to the 21-day EMA that we've been talking about. And to be completely honest, we had talked about this last week. How we finished off last week, this was not really too shocking. Like, we have been pretty far above that 21 for a long, long time, and we're pretty due to pull back to that range. So honestly, I was expecting that possibility to even happen in the beginning of the week, but it didn't. We actually jumped up, and then we kind of edged back down and didn't even touch that 21. So again, not really surprising considering how we've been trending up, considering how we've come almost nowhere near close to that 21-day EMA, that a pullback was in store for us. But the big thing, the distribution, the down day on Friday, all the news that's happening, it's still too early in my eyes to really jump in either direction. To be running for the hills and saying, oh my God, I got to sell everything, go to cash, or to be diving in and saying, I need to be heavily invested, jumping on margins, something crazy like that. How we interact with this 21 day is going to tell us a lot. And if we pull back to it, find some support and bounce, preferably on some higher volume, and we can maybe come back to this June 11th day and break through that uh, prior high that we just had, that could be very, very positive action to the upside. If we break below the 21 on some heavy volume and get some pretty deep distance below that 21, that could be the opposite. That could be negative action. And very likely a lot of your stops are going to be hit if that happens. But in this range that we've been floating around, it's just kind of one of those things where you can't really rush in either direction. You kind of got to sit back and wait and let the market tell you which way this is going to go. That no man's land can be very dangerous. It could chop a lot of people up with up and down days and maybe some breakouts not really truly working. But it's still, if you have positions that you're set up with right now, a lot of them are kind of just moseying along. So I think this is a point in the market where we just kind of got to sit back and kind of relax and waiting to see what really, really, truly happens. Ignore the news, ignore everything that's going on. Not saying from a normal life standpoint, from a market standpoint, definitely do not let the headlines affect the way you're going to trade. The most important thing is price action. The most important thing is what the market tells us, not what the headlines tell us. So keep that in mind. With that also being said, one of the things I do want to add too is just because we break and close below the 21 does not necessarily mean that that's a run for the hills type of thing either. We could easily go through it, break, shake some people out, and then bounce right back up from there. So really for me, watching that 21-day EMA is going to be extremely important to see how things are going to work out. All right. And then just to reiterate, that 6/11, June 11th high, also very, very important. Looking at the weekly, inside week, so positive in that we didn't go below the lows. We also didn't go above the highs. We were up very, very slightly for the week. So inside week, lighter volume, obviously just because of the one less trading day. But inside week, positive action in terms of what we're talking about. Saying which way we break from here could tell us a lot about the market. All right, let's jump over to the S&P. Not too much different about the S&P. Obviously, we have a lot more distribution, so that's something to take note of. We definitely pulled in closer to 21-day EMA, but did not actually touch it. But other than that, we're looking at the same key levels. We're looking at that 6/11 high. We're looking at the 21-day EMA, and we're looking for the same type of reaction. Yeah, not much more else to say there. Click on the weekly real quick. Didn't have an inside week, but still, both these indexes, overall trend is upward. All right, next up, let's talk about just some of the things that we're seeing in terms of themes, industries, things like that. Growth stocks definitely saw some strength this week, so that is a positive sign. Solar got absolutely crushed. I think a lot of us saw that. And like semis were fairly flat for this week. So not really much change from what we're seeing week after week these past couple of weeks. We're seeing the strength in genomics, growth, semis, miners. I'm definitely seeing a lot of insurance companies popping up on a lot of my screening, but not too much changing in terms of what we're looking at on the industry side of things. Exposure levels. I think this is what I try to really, really focus on every single week. Because we're all going to be trading different stocks, different buy points, different ways we exit into the market. But really, that overall market trend is telling us how exposed we should be in the current market condition, how the trend is going. Look, it's pretty much the same thing that I've said while we were breaking down the indexes. We don't really know which way this market is going to go at this point. There isn't a clear trend. We've kind of been sliding upwards, but more moving sideways. So until we get a break in either direction, if you have positions working for you, likely they've been working for a while, you probably got in on the early side of the uptrend, you're going to say probably that those stops haven't been hit. And if your stops haven't been hit, there's no reason to run for the hills. If you are finding that you are 80 to 100% invested and all those stocks are performing fine, let it ride. Don't get emotional. Don't run for the hills because of news headlines and things like that. Just keep those stops, keep updating where you want to make those sells, and be prepared. And also, no reason you can't sell on the upside. I don't think this is the market to be on margin just because of where we're at in the market, but to each his own. If you were not able to buy in the earlier parts of these uptrends, if it was maybe a little scary and you kind of sat back and you let things go on without you, You may find that as you're trying to get in now, things are a little extended. Some of these real true weekly base breakouts aren't working as well. You may be getting chopped up. In that case, I would say maybe sit back. If the trades haven't been working, reduce exposure and don't overinvest. Um, this is the type of market where new buys are going to be difficult. So the people who have maybe gotten earlier in the uptrend may be fully invested. The people who maybe got in later might find it hard to get to that investment point without getting stopped out. Other than that, look, if we can get a good strong bounce off that 21, get some high volume, take out that 611 high, I think it's going to be a good market to maybe increase some exposure. And if we break down, most of us are likely to see some stops getting hit and probably quickly reducing our exposure. But other than that, like I said, just got to be patient. And that's really where my final thoughts end up. Be patient, be vigilant. Make sure you're doing your work every day. Make sure you're staying on top of what the market is doing and how it's acting, all the underlying things that we talk about on this every single week. On those weekdays, search for stocks that have strong RS, that are kind of bucking that trend for that day, that could lead you to stocks that might be primed up for a good break on a strong market. Have a plan on those new buys. Don't just make those plans last minute. And I think this is also a good market to have some real tight stops. With the sideways action, those tighter stops can allow you to get in, but not put too much risk into the market. I'd rather see myself get shaken out of something a little early and then see the stock go on without me than to take a big loss in a choppy market and get eaten up by a bunch of bad stops getting hit. Last thing I will say, I have noticed, and at least me personally, with these earlier gap ups, a lot of them are tending to reverse. So I am less inclined to buy on these early morning gap ups, and I've been a lot more patient on the new buys that I have made. I've been willing to let things kind of go for at least the first hour and see how we interact with that first hour bar instead of just jumping on a stock because it, gapped up through a buy point. Yeah, other than that, that's all I really got for this week. I appreciate everybody. Sorry I didn't get this out early in the week. Like I said, I just had a lot going on this weekend. I mentioned this last week. I'm going to be working on some more content on YouTube. So especially if you're watching on X, definitely keep an eye out for the YouTube channel. And I'll be sharing some cool content there. Discord, huge shout out to them. Got a ton of people, over 900 people in there right now. A lot of people sharing some great opinions. I try to give my daily market analysis in there every single day. So if you're looking for that, that's in Discord. Other than that, that's really all I got. And yeah, stay disciplined. Happy trading.